All right, let's talk about options trading. You see it everywhere, right? It's pitched as the super fast track to building wealth. And honestly, millions of people are jumping in. But here's the thing. Behind all that hype, there are some really serious traps that most new traders just never see coming. So today, we're going to pull back that curtain and take a hard look at the hidden dangers that catch so many people off guard. You know, it almost always starts with a simple question, just like this one that we pulled from a real discussion online. A new trader just trying to get their bearings. Should I be buying calls? Should I be selling puts? It seems so straightforward, like this one choice holds the entire key to unlocking massive profits. And that right there, that's the entry point. That's the lure of the game. This one simple decision feels like the whole strategy. If you can just get this right, you think you're on your way to the moon. But as we're about to see, this question, well, it barely even scratches the surface of what's really going on. I mean, the popularity of futures and options, or F&O trading, has just gone through the roof. It's especially tempting for younger folks who see it as a way to build wealth and to build it fast. That promise of huge returns is a powerful, powerful siren song. And this chart, wow, this really puts the scale of that explosion into focus. Just look at these numbers from India. In fiscal year 2022, you had about 4.2 million traders. Fast forward to 2025, that number has more than doubled to 9.6 million people. The game is getting more and more crowded every single day. So that's the big question, isn't it? With millions of new players rushing to the table, you'd think we'd be hearing a lot more success stories. But when you look at the actual data, it paints a much, much darker picture. And that story comes to us straight from hard data released by SEBI, the market regulator in India. Now, this isn't somebody's opinion or just some random guess. This is a stark, sobering look at the reality behind all the hype. And here it is. This is the number that should really stop you in your tracks. 91%. That is the percentage of individual traders in the futures and options market who lose money. And this isn't just a one-off bad year. This number has stayed incredibly consistent year after year, even as more and more people have poured in. And the sheer scale of the money being lost is just staggering. The total net losses for these individual traders have ballooned from around 40,000 crore rupees to over 1 lakh crore. Now, to put that in perspective, that breaks down to an average loss of about 1.1 lakh rupees. That's around $1,300 for every single person who lost money. Okay, so let's circle all the way back to that original question, buying versus selling. But now let's look at it through the lens of this new, harsh reality. If 9 out of 10 people are losing their shirts, does the strategy they pick even matter that much? So this slide here lays out the conventional wisdom perfectly. On one side, you've got the option buyer. Think of him like a home run hitter, swinging for the fences. The potential profit is massive, but the odds of hitting that grand slam are pretty low. And every single day, time decay, what traders call theta, is eating away at their position. Time is their mortal enemy. Then you've got the seller. They're playing a totally different game. They're aiming for consistent, smaller wins with a much higher probability. They're collecting that premium while time slowly works in their favor, making it their best friend. But, as any experienced trader will tell you, even this neat little breakdown is a huge oversimplification. The real world of trading is so much messier, so much more complex. This simple choice isn't some magic bullet. So, if it's not the strategy, what is the real reason for those mind-boggling losses? Well, the answer, it turns out, might have a lot less to do with the stock market and a whole lot more to do with what's going on right between your ears. The biggest challenge isn't picking between buying and selling, it's the battle you're fighting against your own mind. This brings us into the fascinating world of behavioral finance. And the core idea is pretty simple. We are not the perfectly rational, logical decision makers we like to think we are. We all have these built-in psychological glitches, or biases, that systematically push us to make irrational choices with our money. And research has pointed out a few key culprits that always seem to trip up traders. You've got overconfidence bias, which makes you think you've got the Midas touch and can't possibly lose, leading you to take on way too much risk. There's herding bias, which is basically just financial FOMO. You see everyone else piling into a trade, so you do too, often right before it goes off a cliff. Loss aversion is that powerful, gut-wrenching feeling that makes you hold on to a losing trade way too long, just hoping it'll turn around. Then there's confirmation bias, where you only look for news that agrees with your trade and ignore all the warning signs.
And finally, anchoring bias, where you get stuck on the first piece of info you saw, like the price you bought at, and it clouds all your future decisions. These aren't character flaws, they're just features of being human that are absolutely disastrous in the trading world. So if our brains are basically wired to fail at this, how does anyone succeed? Well, the difference between the 91% who lose and the tiny fraction who win isn't some secret formula or a fancy indicator. It's a complete, fundamental psychological shift in how they approach the entire game. Let's break this down because the difference is like night and day. The retail mindset is totally fixated on the outcome of the very next trade, and it desperately wants certainty in a world that has none. A professional, on the other hand, is obsessed with flawlessly executing a proven process over hundreds of trades. A retail trader is terrified of losses, and that fear drives their decisions. A professional plans for losses, they just see them as a cost of doing business. It's a completely different way of relating to risk, to time, and really to yourself. And this might be the single most important distinction of all. Most traders come in asking, how can I make a ton of money? The professional's first and most important question is, how do I make sure I don't lose the ability to keep playing the game? Survival always comes before profits. So what's the big takeaway here? Maybe the real trap isn't the market at all. Maybe it's our own impatience, our own emotions, our own brain wiring. Maybe the path to success isn't about finding the perfect strategy, but about building a mindset that can last. Because in the end, the goal isn't just to win one trade. It's to stay in the game long enough to trade tomorrow.